So let's talk about a trading strategy with a high winning percentage. You see, as traders, we love winning trades, don't we? And we don't like losing trades. So as a trader, our dream is a trading strategy with a 100% winning percentage, meaning that every single trade is a winning trade. But does this really exist? Well, we all know that losses are part of trading. But I've been trading a strategy over the past 3 months. Today marks the 3 month anniversary, and thus far, with this strategy, I have not had a losing trade. So before I show you the strategy, let's actually talk about some results. So I want to share my screen with you. So as I said, I have been trading this strategy for the past 3 months, and as you can see right now, I'm sitting on $11,329 in profits. Now, let's take a few notes. 3 months ago, I started with a $50,000 account. So for me, this is a rather small account, and I opened the account to trade it publicly with you here on YouTube so that you can follow along. And profits thus far is $11,329. So this is 22.7% in 3 months. How do I know? Well, let's bring up my handy dandy calculator. So we take the $11,329 divided by the $50,000 that I put in, and you see we get at 22.658, so I rounded it to 22.7 in exactly 3 months. As we know, the year has 12 months, so this would be 22.7% times 4. If I could keep it up, I would be making 90.8% per year. Now, I don't know about you. For me, this is pretty exciting because on this rather small account, this means that I would make $45,000. So if you think about it, if you have a $100,000 account, you can make $90,000. That is not bad at all, don't you think? Now, the key question is, are these SRC profits? And what does this stand for? Well, it stands for systematic. If you've been following me for a while, you know this. And well, I'll show you the system or the strategy that I use. So absolutely, yes. Is this repeatable? I need to count how many trades I take, but usually they're anywhere between 5 and 20 trading opportunities per month. So it's not like the once in a lifetime. I mean, we looked at it a few minutes ago. Snapchat today jumped 30% because they reported better than expected earnings. Well, is this repeatable? No, probably not. But here, what I'm going to show you is repeatable. Now, last question, is this consistent? Well, I can tell you it works like clockwork because most of them are weekly profits. And I'll show you some very specific examples here in just a moment. But I also want to show you how does this work. So this trading strategy that I'm trading here is called the wheel. This is how I've named it. And I want to give you a quick overview over the 5 steps because there are 5 steps to this. And then we'll dive into some very specific examples, look at my account and look at some trades that are going on right now and some trades that I'm considering. Okay, so let's get started here. So number 1, you want to pick a stock that's going sideways or that is slightly moving up. And I'll give you some examples here in just a moment. Number 2, on this, we want to sell a put option. So this means that you have to buy the stock at the strike price that we are selling. Again, I'll give you some examples here in just a moment. But I want to walk through the steps so that you can take notes if you want to, because I'm not holding back. I'm giving the full trading strategy here. So this is where we want to collect the premium for this put option, and we want to buy it back when we see 90% of the maximum profits, right? So if we sold it, let's say for $100, and we can buy it back for $10, so it means that we are making $90, 90%. This is when we want to buy it back and close the trade. So number 4, however, if we can't buy it back, and if we get assigned, this means we have to buy the stock. In this case, we will sell calls, and this means that if it goes above the call price, right, we have to sell the stock at the strike price. I'll show it to you in a moment. So number 5, same here. We collect premium on the call and we buy it back when we see 90% of the profits. So this in a nutshell is the trading strategy, and I'll show you some very specific examples here. Now, talking about a trading strategy, very important. What does a trading strategy do, or trading system? So there's three things. Number one, the trading strategy tells you what stocks or options to trade. Right here, number one, we pick a stock that is going sideways or slightly moving up, and I'm giving examples here. Number two, it tells you when to enter. And this is what step number two does here. We're selling a put option, so which means that we would have to buy the stock at the strike price if the stock is below the strike price at expiration. And then number three, it tells you when to exit. These are the three things that every trading strategy should give you. And this is exactly what this trading strategy does. So are you ready to see some examples? So let's actually jump back into the account, talk about a few very specific examples here. So here are some positions that I have on right now. So the first one that you see here is, for example, for the Dow. So let's take a look at the charts, and let's take a look at the Dow and what exactly I'm doing here. First of all, going back here and to the Dow, you see that in this trade I have been for 2 days, only 2 days in this trade. So my idea here is that the Dow will stay above 45.50 over the next 2 days. What do you think? Is that very likely? So I marked the expiration here with a green line. So the idea here is that it stays above 45.50, which is the blue line, over the next 2 days. If so, I would keep the whole premium that I sold. So I sold this here for 44 cents. So let's just do the examples of trades that I have in my account right now. And as you know, yes, these are real accounts. So the first one is the Dow sold the 45.50 put for $44 per option. And I traded 4 options, and this means 44 times 4. So this is making $176. Now, it might not sound a lot to you, but here's the deal. I'm trying to make this $176 in 4 days. So what does this mean, right? If I'm now taking these $176 divided by 4, so the idea here is that I'm making $44 per day. Now, if you think about it, a year has 360 days, right? So if I can do this all the time, here's what would happen. $15,840 in a year. Now, again, these are very systematic, predictable, and repeatable trades that I do here. So that's not bad at all. So I'm always looking at the premium per day. That for me is super important. So we'll talk about this trade in a moment, but I wanted to show you some other examples. So KSS is another trade that I have on. So here I'm betting that KSS is staying above 1850 for the next 2 days. I have had this trade on. I sold this for 15 cents. So this is another example. And here I traded 13 options. So 13 options means $195. And again, this is $195 in a maximum of 7 days. I've had this trade for 5 days, and I expected to hold it for another 2 days. So this is where we take the 195 divided by 7, which leaves me at around $28 per day. And again, we're taking this times 360. If we wanted to, you get the idea, so that we know how much we would make in a year if we can consistently do it. And the cool thing is, we can. And again, all of this is based on a $50,000 account. I wouldn't worry about the trading days, because here I'm really using calendar days. I'm holding these over the weekend. It doesn't matter. Don't worry about the trading days. I really hold it over the weekend, so it is true calendar days that we are using here. So you can use 360 days. Trust me, my calculations are correct on this one. And here I want to show you an example that right now looks like it is a little bit down. And the example here is IBM. And here's what I did, and here's what I'm hoping for. I sold the 115 put for 43 cents. And I did this 1 day ago. I traded 2 options, which means $86. And again, $86. If IBM stays above 115 for another 2 days, I would make $86 in 3 days, which is around $29 per day. Now here's the deal. As you can see, I have all these 3. I have actually more options right now. As you can see, I also have WIN and I have TQQQ. So all of these add up. And this is how it adds up to the 90% that I've shown you earlier. Making sense thus far? So we will see. And as you can see, sometimes we're getting assigned. And if we do, for example, if IBM closes below 115 in the next 2 days, then I have to buy IBM for 115. And these things can happen. But you see, whenever I was assigned, look at this, I was assigned in these 3 shares, in Apple, TQQQ, and TRGP. And this is when you can make really a lot of money. Okay, so as you can see here, so they are way bigger, these profits, than all of these other profits. So I kind of like it when I'm getting assigned. It is part of the strategy, and it really shouldn't surprise you. As you can see, there's 5 steps to this strategy, and these 5 steps are consisting of first selling a put, then when you get assigned, selling a call. So all of this sounds great, but let's talk about the mistakes that you can make. So the question is, how can you mess this up? Again, I've been trading it for 3 months. As you can see here, this is realized profit, not a single losing trade. The red numbers here is the commissions that I'm paying. So there are some commissions that I'm paying. I'm with Tastyworks. If you want to learn more about them, go to rockwelltrading.com, Tastyworks. But these are the only red numbers here. And yes, right now I have some unrealized P&L, but I don't care about the unrealized P&L. I care about the realized P&L. Anyhow, so question is, if this is so great, how can you lose with this strategy? Well, surprisingly, there are actually 5 ways how you can lose. Number 1, picking the wrong stock. If you're not picking a strong stock that is generally going sideways or in an uptrend, if you're picking a stock that is going down, you're betting on a sinking ship, and that is not good at all. So this is the one big mistake that most traders make with it, picking the wrong stock. Number 2, picking the wrong strike price. So why is this so important? You got to pick a strike price at which you are okay owning the stock. And many traders who are trading the strategy are picking a strike price that is way too close to the current price. You got to give the trade some room, right? So that the stock can actually move against you for a little bit and you will still be okay. Number 3, picking the wrong expiration. What does this mean? Options expire weekly and they expire monthly. I like to trade options that expire weekly, but this does not mean that I'm only selling options that expire this week. Sometimes I do it for the next week because the premium per day is most important. And this is mistake number 4, not getting enough PPD, premium per day. You see, this is what I said here. It is super important. For me personally, I do not want to take any trades that do not provide me at least $20 per day. That is my threshold based on this account size here. And this is where I see sometimes traders picking a stock or an option here that doesn't provide enough premium per day. Now, number 5 is not knowing what to do after you get assigned. Let's take a look at this again. You see, with IBM right now, it can be, IBM is trading right now at 115.14. So can IBM trade below 115 over the next 2 days? Yes. Could I be assigned here? Yes, absolutely. But I have a plan. I know exactly what to do when this happens. Anyhow, so what I wanted to do here in this video is, first of all, show you the exact strategy that I was trading over the past 3 months, and I will keep trading it, to make thus far in 3 months 22.7%. These are SRC profits, systematic, repeatable, and consistent. I also wanted to give you examples so that you see exactly what I'm doing, and I want to show you what you can mess up here so that you know what you need to be careful and watch out for. Let me ask you, is this helpful at all? Because I have a few more things to share with you. And is this making sense? And also wanted to know, would you like me to send you a text message and an email whenever I place a new trade? Because if so, I have something for you. I have a power income alert service. It is rockwelltrading.com/1. So this is where whenever I'm placing a trade, I'm sending you an email, I'm sending you a text message, and also a push alert. And I want you to test this service for 30 days for only $1, right? So if you go to rockwelltrading.com/1, I'll be happy to send you all of the trades that I take personally in this account that you have just seen, right? In the account where I made $11,000 based on a small $50,000 account in a systematic, repeatable, and consistent way. Now, after the 30 days, if you would like to continue the service, it's $147 a month. And honestly, that is a steal because look at this. Even if only one of these trades, only one of them that I'm sending you is working out, you'll make back the investment here. This is what I got for you. So if you're interested in this strategy, go to rockwelltrading.com/one. Sign up for this. We only have this available for the next few days. So if you're watching the recording of this video here and it is no longer available, it is gone. So sign up right now while you can, rockwelltrading.com/one. Anyhow, if you enjoyed this video, do me a favor and click on like so that more people will see this video. And if you would like to see more videos like this with specific trading strategies, with tips and tricks around the tools that I like to use, as well as the right mindset, then click on subscribe and also hit the little bell because this way you get notified whenever I release a new video. And also feel free to share this video on Facebook, Twitter, or by email. And I will see you in the next video that hopefully is popping up there. And again, go to rockwelltrading.com/one. I'll be happy to send you the trades as I'm taking them in real time so that you can replicate them in your account. See you in the next video.